Most people think Wall Street is about high-stakes gambling and frantic shouting on trading floors. But what if I told you the most successful firm in the world right now is actually moving in the opposite direction? Welcome to HDIN Research. Today, we're decoding the $10 trillion pivot, how Morgan Stanley stopped chasing the wind and started owning the atmosphere. This isn't just a bank anymore, it's a global dominance play that's hiding in plain sight. For decades, Morgan Stanley was the classic bulge bracket bank, great when the sun was shining, but shivering when the market got cold. But look at them now. They've successfully pivoted from a volatile trading shop into what we call an integrated asset gathering powerhouse. In 2025, they pulled in $70.6 billion in revenue. That's not just growth, that's a structural shift. They're no longer just betting on where the money goes, they're making sure it stays with them. Okay, let's talk about the holy grail of banking, ROTCE. Most banks are thrilled to hit 15%. It's like getting a B+ in a class where everyone else is failing. But Morgan Stanley just printed a 21.6%. That is an A++ with extra credit. This isn't just a good year, it's a structural decoupling. They've essentially figured out how to generate massive profits without having to gamble the entire house every morning. If you look under the hood, you'll see why investors are sleeping better. Over half of their revenue now comes from boring things, asset-based fees. Think of it like this. Instead of relying on a big lottery win every month, they've built the world's most expensive subscription service. 53% of their money is now recurring and stable. In the world of finance, stability is the new sexy. But don't think they've gone soft. While wealth management is the anchor, their institutional securities arm is the high-performance engine. Their equity trading desk grew 28% last year, taking the world's #1 spot. It's like having a Ferrari in the garage for the weekends, while your SUV handles the daily commute. They win when the market is calm, and they win even bigger when it's wild. Let's talk scale. $7.4 trillion in client assets. To put that in perspective, that is more than the entire GDP of Germany and Japan combined. It's not just a portfolio. It's a moat so wide that competitors can barely see the other side. This is the center of gravity for the entire firm. Once money enters this ecosystem, it almost never leaves. The real magic isn't just what they have, it's how fast they're growing. Last year, they attracted $356 billion in net new assets. That is nearly $1 billion of fresh cash walking through the door every single day. While other banks are fighting for scraps, Morgan Stanley is basically running a giant vacuum cleaner across the global wealth landscape. This is my favorite chart for the nerds out there. It's called Widening the Jaws. Their revenue grew at 14%, but they kept their costs at just 8%. It's the business equivalent of getting a huge raise while still living like a student. Their efficiency ratio dropped to 68%. In plain English, they're getting richer while working smarter, not just harder. Now, everyone is talking about AI, but Morgan Stanley is actually using it to make money. They aren't just letting chatbots talk to clients, they're arming their advisors with custom tools that make them twice as productive. It's a quote, margin multiplier. Instead of hiring more people, they're just making their current team sound like geniuses. That's how you scale a business without the overhead. For those of you wondering, is my money safe? The answer is a resounding yes. Their CET1 ratio is 15%. The regulators only ask for 11.8%. That extra 3.2% might sound small, but it's a multi-billion-dollar shock absorber. It's the financial version of wearing 2 seatbelts and having 10 airbags in the car. They aren't just profitable, they're bulletproof. But let's be real, even titans have heels. If interest rates pivot too fast, that easy money from deposits starts to vanish. And we can't ignore commercial real estate. There's a lot of empty office space out there. We're keeping a very close eye on these Achilles heels in 2026. Success breeds complacency, and in this market, complacency is the silent killer. So where do we go from here? Morgan Stanley isn't resting on its laurels. They have a new horizon in sight. Welcome to Vision 2027, the roadmap to becoming a $10 trillion platform. Let's see how they plan to get there. Wealth is global, and so is the strategy. While 75% of their money comes from the Americas, they're strategically placed in London, Hong Kong, and Tokyo. They've essentially built a hub arbitrage system. If the US slows down, they pivot to Asia. It's like being the house in a casino. It doesn't matter which table is hot, the house always wins. The goals for 2027 are ambitious, sustaining that 20% return, hitting the $10 trillion asset mark, and keeping efficiency under 70%. It's a new normal, where they don't just participate in the financial system, they are the financial system. They've built the machine, now they just need to keep the oil flowing. So let's wrap this up. Is Morgan Stanley the perfect business? It's as close as you get on Wall Street. They have the best revenue mix, record-breaking asset inflows, and a capital buffer that would make a central banker smile. Just remember, even the best ships can hit icebergs. Watch those interest rates and tech execution. But for now, they're the ones setting the pace. Thanks for joining us for this HDIN Research deep dive. If you want the full numbers, the secret sauce, and the bespoke reports that the big players use, you know where to find us. Drop us an email at sales@hdinresearch.com or visit our site. Until next time, stay sharp and keep watching the money.